Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar managed to exceed its target of 71.55 area, but at present though may actually see a pullback from the rally from overnight. The US Federal Reserve hiked its rates by 50 basis points on Wednesday and somewhat gave a slightly dovish statement. Nevertheless, the market still anticipates further rate hikes from the US Federal Reserve, keeping around 50 basis points. This in turn saw the US dollar, which measures the greenback strength against a basket of 6 major currencies, drop from 103.60 to 102.50. In light of the pattern though for the Australian dollar, I feel the market may pull back slightly, anywhere towards that 71.80 support level where it did break, and then could rebound from there and maybe see a further rally and take out the 60-day moving average, which is seen somewhere around 73.15 and progress further to the high 73-cent area. The euro also displays an impressive rebound from that 104.85.95 level and now looks towards the resistance somewhere around 106.15.30. With the dollar still a little bit shaky due to the recent Fed rate decision, the market now looks to the Friday event, which is the non-farm payrolls, which does expect a slightly lower number, therefore could see a little bit of a weaker play into the US dollar and may in turn see the euro rally on slightly further if it breaks 106.30. Still though, we would like to see both confirmations from the indicators, that is the RSI and the MACD, to support the bullish call. Otherwise it could be a little bit volatile and eventually see those gains above 106.30 returned and look back towards that 104 area. With the support level finally taken out for dollar yen at 129.60, it's now given a projection to the downside around 127, with the technicals married up, that is the RSI and the MACD, after the given bearish divergence, does support this negative view. Sterling rebounds very sharply from the lows around 124, and with that base holding at 123.80 has posted a bullish outside range day. We did get an inverted hammer there that did coincide with this positive candle from overnight. Although we're getting a little bit of a pullback, all eyes look to the Bank of England, which is expecting to increase rates by 25 basis points to 1%. But it all depends on how the statement is reviewed. That is more hawkish, but the market will rally on towards 127. If it comes out a little bit dovish, then may see a pullback towards that low 124 area. Overall though, I do like the way this pattern's shaping it up. Let's see if the bulls can continue on its move. Since the top side overextended above 194, it now looks like sterling Kiwi is near enough reached its objective, that is 191. Keep a close watch there, because a break there would give further indication to the bear call down to 188.5. But at present though, we may see some profit taking, that is, from that lower region. Since the rebound of 1,848 to 52, the bulls have maintained a steady rise, and at present though looks towards this top side of 1,914. Like previously, we did see a rejection, so if we do see that again, that would reinstate a potential weaker play into the night, and therefore look towards the lower side of the range around 1,874, or even lower down to 1,848 to 52. But if we see a break of 14, we could see further stops and a squeeze in this move up towards anywhere as high as 1,960. Finishing off with oil, well, the market did break above that 105 and now looks towards that recent highs around mid-April, that is, sorry. That's around 109. Let's see how the market plays. The technicals are a little bit weak, but it really depends on how short the market is after this hammer that was posted. But may see a rejection and then look back towards that bottom side around $97, $98 a barrel. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the rest of the day.